let's say if I have a target of a price target, I will buy on the dip. When we dip to 179, hey, 175 can come. Hey, 170 later. How?
My guest today is Tay Chi Keng, and he runs a YouTube channel dedicated to Alibaba. So today we have some quick discussion points. The first is, why is he so bullish on Alibaba? The second, we'll be discussing Alibaba versus JD versus PDD. The third, I'll get his views on what is the brightest spot for Alibaba, and fourthly, whether Alibaba can expand overseas or not. The fifth point is actually C Limited versus Alibaba in terms of e-commerce. And last but not least, we'll touch on Tencent, on whether it's more monopolistic than Alibaba. So if you're keen for these topics, continue watching on. Good. Maybe the first point that I really was intrigued about, right, that I want to get your views on, was Cathie Wood. You know Cathie Wood, this famed investor. Surely we go around YouTube, we see her name, her thumbnail all over the place.
Yes.
Cathie Wood talk about China growth, having a valuation reset. Valuation reset just means correction in a nutshell. But what are your thoughts?
I think I'll just have to qualify. Of course, she's the professional here. We are really just providing our opinions and chiming in. But I guess, like you said, she's like the poster girl of a lot of thumbnails, right?
Yes.
When you put a face there, your views essentially like at least double or triple. But I think she does have a point, because from my own understanding, she got her fame from Tesla and Bitcoin calls, right? She was extreme bulls and she made a lot of money. And a lot of people claim her investing style as a momentum trader. I'll reserve my thoughts on that. I think
go ahead and share that. No holds barred.
Yeah, I think okay. So maybe from my own opinion, I think that her idea of a valuation reset, it wouldn't be focused, or it wouldn't be solely on just the Chinese stocks, to be honest, because she essentially is a public fund, so she has to have the buy-ins of a lot of investors, right? So her ultimate goal is to get the money from people to improve into
investors inflow.
Yes, correct. So if the entire market sentiment is bad and she continuously buy into Chinese stocks, I think there'll be more people leaving her funds.
Which means she cannot be contrarian, right?
For her, I guess she's really capitalizing on a lot of the momentums in the stock market itself. And in her opinion, I think at least for the next 6 months or 1 year, she cannot capitalize the China growth. But I would just make a small speculation right here. If Chinese stocks gets back into the mainstream, she might enter back again.
She might jump back in bandwagon.
Yeah, she might jump back again for the momentum to build back up her returns and generate alpha.
You know, there's this Chinese saying, 见风使舵. There's a wind blow here, you change it, that momentum.
But she has been doing quite well for the last 5 years, though. We cannot disregard that fact.
Why did she first buy into the big tech in China?
That was why I was dumbfounded as well. I couldn't understand, because in terms of like the thesis, right? If the thesis didn't change, and I don't believe that all this China tech regulatory crackdown is something new. It's there for the God knows how long. So she should have already taken into account all those risks and how she evaluated the position. Yeah. And I think when she bought in, right, it was already quite low, to be honest. In her buying period, if you look through all the graphs, right, I think there's a lot of online resources that show at what periods does she buy in. Yeah, she was buying around like Alibaba and JD in the lows of like Alibaba. I think she was buying around the 230, 240 mark.
Then for JD, she was 2020. Is it?
Yeah, correct. End 2020.
Okay,
yes, that's
and
around
then she
the
dumped it
price
all
range.
now.
She dumped it exactly at the bottom right now, but I don't know where is it gonna bottom. It's gonna bottom again. Yeah, but she essentially sold it out when there was peak fear in the market, in my opinion. But I don't know whether it will go down again or not.
I see on Seeking Alpha and some of these other good forums that a lot of people are trolling her, saying that this is the ultimate contrarian indicator. Cathie Wood is throwing it out. Yes, finally, the worst is here.
Actually, I do agree to that idea and that thesis though, because in my opinion, it reinforces my idea that hey, when Cathie Wood is throwing, that's probably when the momentum is gonna bottom soon. That's my own belief lah, but I don't know whether is it gonna play out or how is it gonna happen sooner or later.
This leads to my question. So you believe now is an opportunity buy on the dip? Now the question is now. We don't say 10 years lah. 10 years. Yes. I'm equally bullish.
Okay. The opportunity. To be honest, right, my own strategy is if I have let's say if I have a target of a price target, I will buy on the dip. So for example, let's say now Alibaba's trading at 200. The last time I bought in was at around 183 or 184. So as we all know, the lowest it went for the last few days was 179. nobody has the ability to time the bottom. Not even Warren Buffett doesn't have. So what I do is really, I split it in tranches. So let's say I want to buy one position at 185. The next position will come in at 175, 165, 155. I'm not saying that technical analysis is useless. We definitely can use it as guidance. And that is how I try to get the guidance. But honestly speaking, as humans, right, we're very emotional. When we dip to 179, 175 can come. 170 later, how? So to me, what I really do is, I'll just tell myself, screw it. I'll just buy at 185, 175, 165. I think that's the easiest way for me to follow.
Is the gap too narrow? Because 175, 185, that is 5-6% gap
okay,
only. If it gaps down to 100, then you're going to run out of bullets.
True. I think the issue here is because you have to know where I started from. So I started from 250 plus or 260. So the gap was, I always drag the gap around 15 to 20%. But the issue is the lower it goes, the faster and the heavier and more aggressive you have to buy. That's how you start dollar cost averaging, right? So I think to me, that's true. If it drops to 100, I'm probably out of bullet. But the queue or the amount of money that I have now, the lowest I can buy is at 155. I'll be honest here. After 155, I don't intend to increase my exposure on Alibaba anymore.
Yeah. Understand. So you are a believer now that this dip is worth it.
Yes. For my plan, I always adopt my plan or my ultimate price target is at 2030. It's a 4-digit. 千里之外. It's a 4-digit number to Alibaba. So regardless of whether I'm buying at 220 or 180, it's still more or less a 4.5 to 5x return. So to be honest, a lot of people also have been asking me to like time the market. What's the valuation or what kind of price are we gonna buy? I'll just tell them to just buy, man. At this kind of price, it's getting a little bit ridiculous, in my own opinion.
Okay. Yeah. So it rounds up to the next point. Like, why Alibaba? Or are you buying Alibaba, JD, PDD, or you're buying the whole China big tech sector? Why Alibaba?
Okay. So my position, I have Alibaba position at around. Now I think I build it up to around 40 to 50%. I don't follow my diversification strategy, by the way, for those of you watching this video. I think different people have different profile and you have different theses as well. So for those of you who don't even believe it, later when Chairman C comes out with something else, then it's end of the world. I don't want to propagate this kind of idea. But I do have a small position in JD as well. It's around 3 to 5% right now. I haven't been building it because a lot of my funds are going to Alibaba.
Yeah, why not just both? Because sentiment-wise, correct, right? Everybody is seeing fire. And then just in case one of them gets killed harder than the other.
Correct.
Do you need to put all into Ali?
Yes. Okay. So for Ali versus JD versus PDD, right? Personally, I'll speak the least. I speak firstly about the one that I have least conviction, which is PDD. So PDD, I have two prongs, which I don't believe. Number one is the business model. Number two is the valuation. So even though PDD has been experiencing spectacular growth, it's 3 digits, by the way. They are 100+% revenue growth or something. Then the valuation is like, I don't know. It's something similar of like, it's astronomical, the current valuation. So as for the valuations wise, I'm definitely not comfortable in buying when it's crazy high because a lot of the growth and a lot of the expectation is really baked in the price of PDD. So that's one. Number two is because of the business model, it's a C2M business model, a consumer to manufacturer. So they essentially do group buying. They try to do more of a social commerce rather than e-commerce particularly. So this entire idea, the margins are low. The only selling point is really the network effect. You need to get people on board, and people have to share, and they usually share via the WeChat system, via Tencent's ecosystem. So I don't really buy into it because I don't really like something with very low margins, especially if you are only focusing on network effect, which I'll transit to Alibaba later. Next, about JD, right? I think a lot of people like to say Alibaba is the Amazon of China. I actually fundamentally disagree. I think JD is the one that's the Amazon of China. I think a lot of their business model, right, they copy from what Amazon is doing. They want to create their own infrastructure, their logistics partner, the warehousing, their capabilities. They spend a lot of capex, like capital expenditure in their own business. And you can also see in terms of their revenue and their margins, right? It's razor thin and it's comparable to Amazon. And right now, because they're also kind of in the, I wouldn't call it high growth, but in the growth stage, they're still pushing out around 20-30% growth year on year. I think this entire idea of JD, I do believe in the logistical capabilities and prowess. So which is also why I think my own like let's say my own at the back of my mind, I was thinking if one day Alibaba can take over the entire thing, it would be the best stuff. But of course, later Chairman Xi will step in and say anti-monopoly again. But the entire idea is I do believe in the strategy itself, but I think there's a lot of headwinds that's gonna come in JD's point of view in terms of their investment, their ROI, in terms of how they're investing in the business. All these are dangers and
because
risks.
of capex. And Ali doesn't do capex, but actually Ali now is moving towards third, fourth, fifth tier. They're doing a lot of acquisition and doing capex already, right? So they are looking more and more like.
Correct, but Ali has already been generating a lot of cash flow, and you look at the amount of cash on their balance sheet is crazy.
Yes.
The entire idea is because Ali right now will be a much more safer bet compared to JD and PDD, because JD and PDD in their own realms, they're doing their own business model. I think the funny thing is PDD is moving up the consumer stream. They're breaking into tier 1, tier 2. While JD is moving down into tier 3, tier 4, tier 5.
I think Ali also, both of them.
But I would dare argue that Ali has already a substantial impact and influence in all types of markets, to be honest. So, which is also why, to me, I like to bet on leaders and I like to bet on winners. And to me, I think Ali will probably come out victorious in a way, because in the entire ability for them to innovate and to expand easily across the entire market in the e-commerce business.
What will be the brightest spot for Ali right now?
In my opinion, the brightest spot, okay, a lot of people are saying online, or like a lot of nice articles, different authors, they're saying that cloud computing is the next big thing, right? Like they reference from Amazon, Microsoft, Google, everybody's stepping into the cloud computing pie. And Ali has always been the market leader for now they're holding around 40 to 45% market share. But we can see that even in the US, if we learn from our overseas counterparts, right? People competing in the cloud market are trillion-dollar companies, by the way. Microsoft, Google, Amazon, all these are trillion-dollar companies. So if you look back into what China is currently doing and what they're developing, the main competitors are Baidu, Huawei, Tencent, and Alibaba, these four. And right now, if I'm not wrong, Alibaba is around 40 to 45, Huawei is 14, Tencent is 14, and Baidu is around, give or take 5 to 8, if I remember correctly. So in this case, right, all these companies are also known as crown jewels in China. All four companies, everybody in China you ask, they confirm know the company. So it's no small feat as well. So I would also like to qualify that, hey, I think in the cloud computing space, the entire competition will be quite scary. And it will be a pretty bloody showdown among all the different companies. And
so who has cash to burn and last the longest?
Exactly. So that's the idea. So who has the biggest cash pile to burn? And we'll come back to the two companies like Alibaba and Tencent. But at the end of the day,
Huawei is coming up. What is it?
Correct.
I read briefly
yes,
about
it. I do agree that and on top of that, Huawei's like on their 5G infrastructure, their relationship with the government and all this kind of stuff, right? It's always good, and I always welcome competition. I love competition because
you speak like the Alicloud representative.
Yeah,
right?
if we stagnate, right, I think it's not good, and it will cause even more problems down the line. Because I think at least for the cloud business, because of all the political concerns about different companies have different drawbacks and reservations, right? The entire idea would be the US big clouds like AWS, Amazon Web Services, and Microsoft Azure, right? They will be targeting the US side of things. While on China, on the other hand, for China, right, they will be consuming their local cloud services. Of course, there can be cross, like US companies not use China, China companies not use US. But I think largely they will be targeting their own domestic markets because of the current US-China tension. And a lot
US
of
can target international. Correct. Whereas Alicloud's international growth
hasn't been.
Yeah, can't move. Is it? Or very small.
Correct. I do agree with that point of view about internationally. AWS is a lot more. They have a lot more tailwinds. They have the ability to expand further. But honestly speaking, I think from China's point of view, right, if for Alicloud particularly, they have the ability to expand more towards outside, like the Southeast Asia region. I think a lot of people, yes. So I think one example would be, I think even AirAsia is also one of the customers of Alicloud. So at least from Southeast Asia's point of view, the presence and the ability for them to be comfortable with China is a lot better. Like they're more receptive to China compared to the other side of the world. And also, maybe just to point out, right, a lot of people are afraid of Alibaba's presence in the international stage. But as of now, they're still growing pretty crazily at ridiculous levels just in their local markets. I think around 90 to 95% of their revenue is generated. Actually, no, I think 80 to 85% of their revenue is generated locally. So their international e-commerce arm like Lazada, like some Turkey e-commerce arm, I've forgotten, was only a mere 4-5% of their entire revenue pie. So at least in their own growth and in their own... There was this article, I've forgotten who written it. I think I saw it in Seeking Alpha. They talked about the total addressable market in China itself, right? It's enough for them to feed themselves for at least a good next 5 to 8 years. So at least that's the progress there. But of course, I think China, if they really want to be ambitious and they want to go onto the global stage, there's a lot that needs to be done internationally because that's where most of the money is at, to be honest.
Agree. Last question. Do you believe in CEO Daniel Zhang's vision that cloud will be the main, just like what Amazon is experiencing?
Because right now, if you look at Alibaba's business, there's three main segments. One is e-commerce, second one is cloud, the third one is financial services, which is Ant Group. As of now, from my own understanding and from my own research, the two easiest business for them to avoid regulation, or like at least the CCP is in principle supportive, is the e-commerce arm and the cloud computing arm. But I believe the biggest opportunity for them is in the financial services arm, which is Ant Group. But the problem comes when you want to touch the financial sector, the governments get very jittery. It's a very big problem. And I can reference it straight away to Singapore. You look at MAS, there's a lot of regulation. They're scared about fintech companies, they're scared about people disrupting the normal layman, our financial sector and stuff. So which is also why in Singapore it's heavily regulated in the entire
it's to really
finance sector.
Retail, because the odd occurrence of someone who's retail getting hurt, getting scammed is always there. That's why this kind of heavy regulation.
Yeah, it's true. At least for China's point of view, I think they're also going down that route. But at least I think for my own understanding of what Ant is offering right now, I think they're 100 times, I dare say they're 100 times better than traditional banks. And I think they have the ability to scale quite easily, to be honest. It's just that now how heavy or how hard on Chairman C wants to push NPay and try to get them set straight on the record. That's the entire idea.
I think just that. So Ant also won digital bank in Singapore. Right? So I think that's also proof that some avenues can still expand overseas. Lazada was a flop, that one aside. But if Ant
I would disagree on Lazada.
Really?
Though. Okay. So for Lazada, right, in the Southeast Asia region, it's true. They started out first, they had the first mover advantage.
Yeah.
It was a Singapore company, they got acquired and all this stuff. Then suddenly C Limited come in, boom, everybody just switched over to Shopee, right? I think in terms of at least for advertising, they're very aggressive in terms of how they are able to market themselves and how they are increasing brand loyalty in a way. It's also very aggressive. But at the same time, you have to see, if you just study a little bit about the C Limited's financial statements and health, right? They're burning like crazy. They're burning like they're printing money essentially. But at least in their gaming industry and the sector, it's trying to balance things out. But in my own opinion, right, the entire e-commerce arm, why is it a quote-unquote flop? I don't think it's a flop because right now, if you were to just do a very objective gauging of the financial health and like the millions of visits per month and the GMV and stuff, right? Definitely Shopee is now ranked first, but Lazada is like not very far behind in second. The entire idea with this problem is why Lazada suddenly lost market share, how they lost their position, how they lost their dominance, right? I really think it's a problem with the focus of the management in Alibaba. They don't treat us seriously enough, to be honest. I think to them, C as in Southeast Asia, not the company. Southeast Asia region, right? They believe that it's definitely a very good opportunity. I from the movements and how they intend to expand in Indonesia, in Thailand, all these countries, right? They know that it's a very big opportunity. But the question here is when's the timing? And right now, right, to them, I think they're just planting seeds. They plant here, plant there, plant here, plant there. They have different presence. You know of the company, but they're not like spending millions of dollars to find Cristiano Ronaldo to come do a song or do some marketing campaigns. So the idea here is I think they're playing the long game. So to me, I think they're just planting the seeds. Wait until they feel that the timing is right. They iron things out in China, they're done. Boom. You can see them coming in aggressively because it's a 600 million.
But China will never be done, right? That will not happen also.
It's definitely a work in progress, but at least because from the management point of view, they will have. I would believe right now they're quite distracted in China side of things. So I wouldn't say that done, but more of they can free up more time to look into how the strategy and how they're supposed to plan to conquer this place. Especially also like you see, Ant Group just won the digital bank license. So I'm also looking forward what kind of interesting things that they can bring to Singapore, or at least if we are the headquarter, what interesting thing they can do to the entire region as well.
But that one is a wholesale bank license, so may not be retail based. All right, you will not show on the retail front that quickly. Hey, but if we pivot the discussion to C Limited e-commerce, same as Ali, no political risk, can expand to many regions.
I would disagree. Okay, I would disagree about political risk. So, okay, the idea of that I did discuss about this idea. I don't know whether you would agree or if the viewers would agree with me. C Limited is in 13 countries. That's 13 different government, 13 different regulations, 13 different relationships. China is in one. So as long as you can align yourself with the CCP, because they are a social capitalist country, it's something like Singapore, but of course Singapore is more democratic. And at least we bother to put up a show and act to people that, hey, we want you guys to we want to have a discussion. We are open to listening. But in China, they just close their chambers. They think what is right, they'll just do what is right. So that's the difference. But in terms of like political risk and in terms of expansion, right, I honestly don't agree that C Limited will be in a much better position.
But China says no, there is 100% no. You work with 13 countries. If Venezuela says no, then forget it. If Indonesia says no, forget it. Correct also what? You won't face problems concurrently in 13 countries.
That's true about concurrently in 13 countries. But I think actually majority of their revenues or in terms of their outreach, right, it's just also that 2 or 3 very big places to generate their gross market value and stuff. So ultimately, you will be, one way or another, you'll be reliant on a few countries. And of course, you can talk about managing relationship with us like Singapore is easier than managing relationship with the Chinese Communist Party. I don't disagree, but ultimately, because you are really playing with a lot of people. And I believe for me personally, I think one person is easier to deal with than 13 different entities. Honestly. Yeah, and building up capital, like social capital in this way, with tying up with government relationships, right? I wouldn't say Jack Ma has been doing it the best with Chairman Xi, but I guess at least he's been stepping down. He stepped out of the chairman, he stepped out of the board. It really depends on how the new team and how the new board is trying to repair or revamp this entire relationship with the government.
I think Tencent seems to have less problems. I know they have gotten some controlling measures also. But Pony seems to be always problem-free. He's like, the low-key smart boy in one corner that gets all the A's.
Yes. Which is also why, the other time when the fine came down hard on Alibaba on the 2.8 billion, then everybody was asking, isn't Tencent even more monopolistic in their own behaviors? Then suddenly more and more fines, more and more regulations started coming in and kicking into Tencent. But of course, if you were to compare, relatively speaking, right, it's not as stark or it's not as influential compared to Alibaba. Alibaba, literally every single news outlet is posting, 2.8 billion, 2.8 billion, 2.8 billion. But for Tencent, it's really more like, it's just a small part of the music that they stop. It's just a $77,000 fine compared to 2.8 billion.
Yeah.
That's significant. That's really true. But I think also one issue about Tencent, right? They're currently like 30% of their revenue or 30% of their business is in the gaming industry. If they can crack down on tech, crack down on ed tech education, saying that it's bad for the children, it's bad for the youth of
Very
China.
Good boy.
It's quite scary if you were to look at it from this point of view. But I'm not insinuating anything, and I'm not representing what CCP is gonna do. But I'm just saying, I'm just putting it out there that hey, there might be some issues coming on, and we have to reevaluate our position again.
Yeah, I think very very good point. Because gaming is such a lucrative arm. I mean, C Limited makes $1 billion in gaming profits.
Yes,
not revenue,
crazy.
Profits. So I haven't looked at Tencent too deeply, but yeah, it's true. They make a lot in gaming, and if gaming needs to be clamped down, too many kids are spoiling their eyes, getting crazy, not spending time being good citizens, then it's time to clamp down their gaming.
In this area of discussion, then I don't really know whether the relationship with the government will really help too much, but at least maybe it might be a softer blow, and it might not be like the ad tech instantly one day I can wipe out billions of equities because everybody just nosedive 70-80%.
Agree. So final point, 10 years, you believe Alibaba is a 4-digit company?
Yes.
High conviction level.
High conviction as in I will give it a quite a high probability that it will be at least minimally $1,000 company.
How do you find the discussion? Leave your thoughts and comments in the sections below. And I've actually a previous video discussing about Alibaba's 4th quarter earnings. If you haven't seen that presentation, let me invite you there also, because that gives you a full breakdown as to where Alibaba's numbers exactly are. So if you're keen, look for the video and I'll sign off from here and see you there. Take care and goodbye.